sake of it, I'll ask, why is someone getting into stock trading? And the simple answer is one of these three things, or maybe all of those three things, which is to create long term wealth, to create a passive source of income, and to ultimately achieve freedom. Now, these are very, very simple objectives, but to achieve them, you really need a systematic process and you really need to treat your trading as a business. Now, if you want to be a day trader, you want to be a part time trader, you want to be a swing trader, whatever it is, all you need to understand is that if you have to win in this market, you can't think like all other retail traders out there. You have to think like the institutions, you have to think like the big boys, you have to think how operators or smart money or the big banks, how do they operate, how do they execute their trades, how do they move the markets, so that you are always, almost always, on the right side of the trade, and you are having the maximum probability of winning in the markets. Now, before I get to trading and the technical part of things and the explanation of the strategy, brief of the strategy, I will quickly show you my verified PNL. Open up my web browser. Just let me know with a yes in the chat box if you're able to see that. Okay, is everyone able to see this? Okay, perfect. All good. So this is my FY 24-25, the recent financial year that got closed. I booked a gross profit of about 50 lakhs. I am the net PNL for about 44 lakhs. The capital deployed is very important to know. So my overall deployed capital, so at the start of the financial year, I started with about 30 lakhs. And then as my profits kept piling up, my capital kept on increasing. And then in mid of July or August, I added another 25 lakhs because the markets were really, really good. And now I'm sitting up with a capital of around 1 crore, which I use to actively trade. Then I have another set of capital for my swing trades, and then I have another set of capital for my long-term investments. For the sake of this webinar, this is what exactly the strategy was able to give me. And I use only one or two trading systems, and there are multiple strategies within them based on market conditions. Now, just by looking at this number, you don't really get excited, because the numbers that anyone show you is really dependent on how much capital they are deploying, number one. Number two, how much experience do they have? And number three, how systematically they trade. However, there are two very important metrics that you need to know whenever you are going through anyone's PNL. Number one is that what is the average percentage return that anyone is trying to make, or what is their target, and what is the general expectation of someone to make if they're actively trading in the markets. Now, when I say actively trading, I don't mean to say you have to stay in front of the screen from 9:15 to 3:30. Active trading is trading at least twice a week, right? It could be swing trading, it could be positional trading, it could be day trading, it could be F&O, commodities, crypto, anything, right? So my expected return from at least my goals are to make about 8 to 10% of my capital every month. That's my goal. Sometimes I'm able to achieve it. Sometimes I am scoring maybe 14-15%. Sometimes I'm maybe at 2-3%, or sometimes if there is a loss, I'm down 3 or 4%. So on an average, I try to make 7 to 8% every single month from my trading. And whatever profits I make from that, I invest them into good quality companies so that my money keeps getting compounded. So that's the philosophy, that's the strategy, and that's the approach that I follow. And with this number, you can also understand that your charges and your brokerage component should never be more than 10% of your gross PNL. So if you are having a profit of, let's say, 50 lakhs, your charges plus brokerage, etc., should not be more than 5 or 6 lakhs. And that's exactly the case. If it is more than that, that means you're over trading. And when it comes to PNL, this is what usually PNL looks like. So I'll just show you the calendar year 2024. And if you look at the calendar year 2024, like from January 24 to December 24, you will see that not every single month is profitable. Some months there are losses, some months there are profits. But when you actually dig deeper, you'll understand that the months in which there are losses are relatively much smaller than the months that are green. That shows you something called the reward to risk ratio of the strategy, meaning that when your strategy is giving you money, when the strategy is profitable for you, how much money is it able to extract for you? And when the strategy is not working out for you, how much loss are you able to take, and what's the ratio between that? So I usually have a ratio of about 1 is to 2.5 or a 1 is to 3. I aim for a 1 is to 3, but not all trades give you a 1 is to 3 risk reward ratio. And last but not the least, what is the win rate of the strategy that we're going to be talking about? So the win rate of the strategy on an average ranges between 70 to 80%. It could sometimes go to 65. It could sometimes even go to 90%. Why am I saying this? Is because the performance or the accuracy of any strategy in the world can never be constant because the markets are ever changing. How many of you agree? Give me a yes. There are markets when there is full momentum, there are days where there is no momentum, there are days when the markets are crashing, there are days when the markets are rising, and there are a lot of other variables, etc. Right? So, on an average, if your strategy is able to give you a win rate of anywhere about 65 to 70%, which is a realized win rate, not on paper but in your PNL, you're good to go. This strategy also gives me somewhere between 65 to 85% of win rate depending on market conditions. And since the risk reward is very good, you are eventually going to make money. So I hope this data really gives you an understanding of what should be your realistic expectations from the market. And to sum it up, I usually tell people to have an expectation of about making about 5% every month when they're starting out, and then they can increase their expectation later on. One simple rule that you'll have to follow, irrespective of any strategy that you use, and this is what I've learned in the last 10 years of my experience: the only thing that you control in the world of trading, and that's exactly how professionals really deal with trading, the only factor in your control in this world of trading and investing is the risk that you take. You can't control how much the stock will go up or down. You can't control what's going to be a statement by Modi or Trump or maybe any other geopolitical scenario, which party will win elections, what's going to happen to crude oil, etc. You have no control over that. The only thing that you have control of is how much risk you are taking. And I have a simple rule: I don't risk more than 1% of my trading capital on a single trade. That's the only rule that you need to follow. I am a believer of simplifying trading and not overcomplicating it. How many of you believe the same? Simplifying trading gives you more clarity of thought, gives you a lot of peak performance in your trading. And complicating your trading with multiple strategies, concepts that don't really make sense, and adding indicators or tools, etc., which are not necessary for you, it's just going to make your life hard. So now let's get to the topic. Trading is a skill, everyone knows that, but there are three major pillars that you will have to ace if you want to do this the professional way. The first thing is technical analysis, the understanding of the market. Now, this is where most traders have a problem. Although the information about trading is readily available everywhere: YouTube, Twitter, Internet, Telegram, books, maybe courses, seminars, workshops, every single place. There is now a lot of information. Actually, there's over information now, and that makes a trader or an investor confused as to what to do, what not to do. So you really need to crack technical analysis. I will help you to do that in this webinar. The second thing that I already mentioned is risk management. You cannot risk more than 1% of your trading capital in a single trade. If you don't follow this rule, I can write it on a piece of paper and give it to you. You will never make money in trading, right? So anyone who's advocating, risk 20% of your capital, 25% of your capital, take risk, go big, go home, they're only going home. They're not making it big in trading, right? So I know trading excites a lot of people. I know there is an adrenaline rush that comes in when you're making a profit, or when the PNL is going green, red, up and down. But you need to keep a calm on yourself and understand that this is essentially a business based on probabilities, right? There is no certainty in this business. But when you have a strategy, when you have a system, when you do things in a systematic, professional way, on an overall basis, on a weekly, monthly, quarterly, yearly basis, you're eventually going to be taking money home. And your objective as a trader is not to have fun in the market, but to rather make money. Now, to do that, everyone will use some or the other kind of a trading technique. And the most commonly used trading technique in the world of stock markets is retail technical analysis. Now, what is retail technical analysis? The word retail means mass market, something that everyone uses, something that is common, something that is a popular approach, something that is proven, etc. Now, retail technical analysis has one simple problem, and that is it is very late. It'll tell you that the stock is bullish when the world knows it's bullish. It's gonna tell you to buy a stock when the move has already happened. The indicators are going to give you buy or sell signals when a lot of those things have already happened. Breakouts, 7 out of 10 breakouts usually fail in the markets. Trend lines fail, very subjective. How many of you agree? Lots of problems, right? Support resistance for you and me can be different. Breakout levels for you and me can be different. 7 or 8 out of 10 breakouts are actually failing. So no one really makes money from breakouts. Indicators give you so much buy sell information that you basically get confused. So essentially, support resistance, chart patterns, indicators, breakouts, or trend lines. These are very commonly used, easy to understand, easy to learn, easy to deploy kind of strategies or techniques, which are no longer working in the current market situation, especially after COVID, when there were over 5 or 6 crore people who got into trading, especially in the Indian markets. Overseas, these techniques anyway don't work. So, what is the major point to discuss over here? The point is very simple. All of these techniques, I'm not saying that they will never work for you. They may work here and there. But if you want a sustainable, consistent, profitable system which is different from others, which focuses on institutional activity rather than only momentum, institutional trading is the way to go. So retail technical analysis is going to give you some problems, and I'll give you an example. Like for example, a trend line is going to say, hey, go buy here because the trend line is broken, and you see the price coming crashing down, taking you out. A breakout tells you, hey, this is where the breakout is happening, institutions are going to arrive, people will start watching the volume candle over here and then suddenly take a trade over here, only to see the markets come back and fall. Similarly, you can see a resistance break, you can see a support break, you can see like a cup and handle, and every single time you're getting a signal, the price is essentially doing the opposite. So this is definitely not the most sustainable or not the most profitable way of doing things. And simply put, if all of these things were working, you wouldn't come here to learn